we're seeing now that with the metal prices as they are, that we're the majors, the producers are making unprecedented profits right now. I mean, their margins are like they've never been before.
Maybe a few years ago, or not so long ago, people would scratch their heads when you talk about gold. It's a pet rock. It was like for the tinfoil hats. The gold bugs are some weird people, and there's no reason for central banks to hold gold. That's changing right now.
And there's lots of projects that look poor at 1,500, and those projects are looking very, very rosy at 3,000.
Good morning, good afternoon, or good evening, depending on where in the world you're signing in from. Got a fun discussion today. But joining me are Brian Skanderbeg, President and CEO of GFG Resources, Marco Rock, President and CEO of Cassiar Gold, and Bob Archer, President and CEO of Pinnacle Silver and Gold. Gentlemen, how are you today?
Excellent.
Well, Romeo, thanks.
Awesome.
Great.
Good. It's December. It always comes a bit faster than you expect it to, but here we are. So the conversation today is about precious metals prices and how they affect the juniors. There's a lot of content I want to get through today, so here's how today's going to work. I got some conversation starters to let the gentlemen here express their expertise, but this is still an interactive event. So there's a chat button on the bottom right of your screen. Please use it at any point during today's conversation to either chat amongst yourself or to ask questions for the executives in the room. I will say that if there's questions about individual securities, feel free to ask them. I'll keep the transcript. We probably won't get into those today. We're going to just stick to the macro topic. It's kind of on the table for discussion. But I will make sure that the teams get those individual questions and they can get back to you as quickly as possible. Last boring piece of housekeeping. This is being recorded. Will be available for replay in probably about an hour and a half. It'll pop up on our YouTube, but also on this link. Okay, boring stuff done at auctioneer speed. I want to get into the protein. Brian, I'm going to start with you on this one, if you don't mind. Gold became the first asset in history, as I understand it, to 30 trillion in market cap, trading around 4,200 an ounce, I think just under as of today. We had silver breaking all-time highs, but junior mining equities remain at, in my opinion, I think the market's opinion too, historically depressed valuations compared to those 2011 peaks. And generalist investors still only have 2% of portfolios to precious metals. Here's my question to you. What do you think needs to change for capital to really flow meaningfully into junior mining companies and the juniors to feel the heat that precious metals prices are seeing?
Well, look, thanks for that, Romeo. I'll take the easy one here. I think it's time. And I was thinking about this question earlier today, and the reality is just look where consensus is. Look what the price decks that most of the bankers and most of the investors build in. It's still a very significant lag to anywhere near where we are metal prices now. So the one thing is the time catch up between spot consensus. The other thing that comes with time is balance sheet. And the more time we have at metal prices anywhere near where we know, balance sheet growth improves materially quarter over quarter. You can look at any of the producers these days, and they are in materially different position with each quarter. And so this capital flow piece, this movement piece, and one of the ways to close that and bring more people into it is really just producers moving valuations and I think bringing more eyes to the space. So I'm really convinced this is a time issue, and the longer time we spend at these prices, you will see it flow to more of the juniors. So that's the biggest one from my side. I'll throw it to some of my peers and let them answer some other ones.
Yeah, great. Bob, I'll give you the same question. What do you think has to change?
Yeah, to be honest, I agree with Brian. I think it's just a time factor. It always starts with the majors, and gradually works its way down the food chain. And we're seeing now that with the metal prices as they are, that the majors, the producers are making unprecedented profits right now. I mean, their margins are like they've never been before, and so it's really, I think, just a matter of time before people really start to wake up to that and recognize it. And then, once they do that, then it starts to, filter down, and they start to look at valuations and realize where the true upside is, and just go from there. It will gradually factor down or filter down rather to the juniors. I've been quite pleasantly surprised this year as to how quickly that has already happened just since the beginning of the year. We have seen a pretty quick change, but then that's largely been driven by the remarkable rise in the precious metal prices. Just the way they've gone up. I mean, gold's up 60-some% on the year. I think going forward, if this continues, and I think it will, maybe not at the same pace, but it'll gradually just get people's attention, and then it'll filter down to the juniors.
Oh, great. Appreciate that perspective. Marco, I'll throw it to you to wrap up this question. And just big picture, what do you think is going to help close that gap?
That it's a great question, and I think I think we really need to put it in context. As you correctly pointed out, gold's got 30 trillion market cap. That's basically the above ground gold that we have in the world. There's about half of it in resources underground, most of which may not be economic. With this rise in the gold price, there's trillions of dollars that have been created of wealth, many of which is actually sitting on central banks, but a lot with generalist investors. But what is, I think, important to see, and like Bob and Brian mentioned, you'll probably, at the end of the day, it's just a matter of time. You'll see, maybe a few years ago or not so long ago, people would scratch their heads when you talk about gold. It's a pet rock. It was like for the tinfoil hats. The gold bugs are some weird people, and there's no reason for central banks to hold gold. That's changing right now. You've seen the big producers, doing quite well. Up 100, 200, 300%, which is great to see. You'll probably see over time as people realize what gold actually means, which is a risk-free asset and basically a better alternative to holding basically government securities that hold risk, including U.S. treasuries. You'll see more people getting comfortable with gold, and you'll see gradually people jumping over the fence and looking at gold producers, because the valuations are extremely attractive. The cash flow yields are very attractive from producers. So I would argue that, number one, gold still actually has a lot of room to go up. I don't see any reason for basically gold to stop going up at this point. But the valuations of the producers still have a lot of room to grow. And eventually, people will start trickling down as they look for value in the developers, in the juniors. And, that's, both, there's an education side of it, because it's not the easiest industry to wrap your head around, but there's a lot of opportunity, especially when you consider that the general equity markets or the mainstream investments are actually, I would say, extremely expensive in historical terms and in valuation terms. And the gold sector, despite this rally in the gold price, still offers very attractive valuations, and you'll continue to see that trickle down as people get more interested, as this kind of cultural war that we've seen over the last 15 years on mining or extractive industries or resources kind of fades away, as people realize that if it's not grown or mined, if it's not grown, it has to be mined. So you can't just print things out of thin air. And people look for better alternatives. And as you go down the food chain in the developers, and as an M&A kickstarts, you'll see those valuations, rising to more appropriate levels. And I think there's going to be a lot of value creation and a lot of wealth created in this sector for the next few years. I don't think it's going to be, something that's going to be all of a sudden. I think it's going to be a slow trickle down as people get educated, more comfortable, and I think this sector is really ready to shine over the next few years.
Great. And it's funny, my next question, I know, Brian, just you and I were talking yesterday, and somebody asked in the chat, when is there going to be consolidation? Because in my perspective, we've already seen remarkable consolidation this year. Fresnillo acquiring Probe for $780, Kerr taking out New Gold, Northstar taking out DeGray, IAMGOLD buying Northern Superior. My question to you guys, and Marco, I can start with you here. What are acquirers prioritizing when they're evaluating targets? Is it, to your eyes, ounces in the ground? Is it grade, jurisdiction, permitting status? What do you think they've got their eye on when they're deciding what to make part of their setup?
Well, I think it's all of the above. Then I mean, the industry and putting a mine into production carries a lot of costs, a lot of risk, and there's a long list of items you want to look at. Political risk, which is actually a very important topic these days. And actually, I think the world became a lot smaller for gold mining companies in terms of where does it make sense to invest hundreds of millions of dollars, in some cases billions of dollars, to put a mine into production. Of course, grade is very important. Although with the recent rising gold price, there's fewer and fewer projects that don't work at this current gold price or silver price. Of course, size potential, permitting or social considerations, environmental, access, infrastructure, topography, weather. I mean, the list goes on and on and on. But I think the really key ones, especially for the big M&A, is really political risk. And in my view, the safest jurisdictions these days have become basically North America and Australia for the Western mining companies. And basically size potential as well, especially for the bigger companies. Maybe 10 years ago, companies would be looking for, or be happy with 100,000 ounce or 150,000 ounce per year scenario. These days, they want to see 200, 300, 500,000 ounce of gold production per year. Especially the bigger companies, and this all comes into play, and especially the political risk. I think it's very digital. It's a go or no go situation. Everything else is basically just a factor, and it could provide a bit of a discount or a bit of a premium to each project, but you really need to consider everything about a project, all the benefits or all the advantages or the aspects in which a project is less competitive vis-a-vis other projects around the world as well.
Great. No, appreciate that perspective. And Bob, I'll throw it to you for what you think the majors or the mid-size we're also shopping right now, I think, are looking to acquire.
Yeah, I think jurisdiction is certainly a key component. We've seen a lot of deals kind of go south, or a lot of projects, go sour in recent years for various reasons, often political. And look at what's happening in Mali right now, and places like that. So it's something that a lot of people are very cognizant of. And there are other jurisdictions where things do seem to be improving, Mexico being one. So I think all these things are all sort of moving parts, so to speak. But that's certainly a key one. Things like grade and so on. I mean, that's always been there. Obviously that's a key component of the economics of any deposit. So that's something that's always factored in. But as Marco points out, the rising metal prices is making a lot more projects look better than they have in a very long time, and some that have been sitting off the shelf are now going to get dusted off, and people having another look. So I think we'll start to see more of that as time goes on, and as with everything else, it starts with the majors and works on down through the mid tiers, and we're seeing that now. We haven't really seen it coming down to the junior developers yet, and that will take some time. I mean, we're not there yet, and then ultimately the junior explorers. We're still not seeing a lot of new discoveries. That will come with time, because obviously it takes money to do that, and it's really only been about 6 months, 8 months that the junior explorers have been able to raise any money. So once they start to deploy that capital and start making discoveries and then developing those, then we'll see the sort of a bit more consolidation in that sector, and maybe the mid-tier guys coming in and taking a closer look and starting to fund some of the juniors as well. We haven't seen a lot of that lately either. Where the mid-tier companies are stepping in and taking a big chunk of juniors. We've seen some occasionally, but usually with projects that are already a bit more advanced. So looking forward to start seeing that, and that'll certainly give us a better sense that things are progressing in the right direction.
No, I think that perspective is useful too, and just the order of things. Brian, I'll throw it to you to kind of close this topic off before I get to something in the chat that I think is really interesting.
Sure. Look, I think my peers are pretty solid. Jurisdictional is a main driver in how groups are thinking about this. I simplify that a little bit more, and I say established camps. And established camps gives you a social license. It typically gives you infrastructure, and it gives you systems that are well understood from a mineability and processing point of view. So if you look at some of these acquisitions, and you could just use Probe for an example, Probe was acquired. It sits in Val-d'Or. Val-d'Or has systems that are well mined. You know you're going to permit them. You know you're going to have people to mine them. You understand that they will be metallurgical, and you're not going to get any surprises on that front. So I still think that at foremost, when you look at jurisdictions, Canada, North America for sure. And then front of that line is these premier established camps where acquisitions are going to consolidate them. And those camps are where the infrastructure is. So the rationale to acquire where you have infrastructure obviously offers you much higher payback and better financial metrics. So I would just add that to my peers.
No, definitely appreciate that. There's one, this is from the chat, and it's almost exactly the same as my next question. So I'll try to combine them. You can pick whichever you prefer to answer first. And Bob, I'll throw this one to you first. It's similar to what we were just talking about, in that the gold producers are generating record cash flows, and yet the disconnect between producer valuations and the developers and explorers is still pretty aggressive. So what Mike asks in the chat, which I think is just an interesting question, is there anything fundamental preventing a major from just buying each of your companies for 5 times current market cap? Because even at 5 times, it's peanuts to the big elephants, and they need new ounces. So Paul, I'll throw it to you first. I think it's an interesting version of my question.
No, it is for sure. It's I mean, the straight answer is no. There's nothing really to prevent them from doing that. And there are some companies that would be happy to sell out for 5 times their valuation. But I mean, I spent the first 15 years of my career with the majors, and particularly in the latter part of that on the evaluation side, and from that experience and everything I've done since, I know that the majors tend to they want to de-risk things as much as possible, and so that's why they would rather sit back and wait and let the juniors take all the risk and prove up a resource or wherever it might be, and get the permits and so on, advance those projects, and then step in and pay whatever the going price is at that time. So it's really, from their perspective, it's more about risk than price. That's I don't think the price aspect of it really doesn't enter into it so much, so yeah, I mean, there really is nothing from preventing them from doing that. There never has been, but it's more a question of risk, I think.
I appreciate that. And Brian, I'll shoot it to you next on this one. Of why not just buy GFG for 5 times market cap? Why would a mid-tier not do that?
Yeah, look, I mean, I think there's a preferred path, and many of them will be shareholders to start with, and this goes to Bob's context on de-risking a project from a technical perspective, de-risking a path from a people perspective. And so partnerships, share structures, investments are a preferred way for the producers to play the front end of the risk space. And as you advance and de-risk a project, and take it to a resource or an economic analysis, that's the window. I mean, Great Bear was a prime example. Whether the market understood what was there, a Kinross could build a very detailed and accurate, arguably feasibility or pre-feasibility level confidence project on what they were acquiring. And so it's this context of risk as it relates to capital, but also risk as it relates to exploration. There's so many exploration stories out there that to go and acquire from an exploration, buying the company for exploration stage, it just takes on the risk. So I just don't think that most producers will take that path yet. Some do, but those examples are the minority and the rare piece. And I think most producers would choose to and prefer to take a de-risk profile, either through deals or through a more advanced asset and something that can put an economic study to.
No, thanks. And Mark, I'll let you wrap up this one.
Yeah, sure. No, I think I agree with both Brian and Robert. I think there's really nothing to stop them, and I think at least for what Cassiar is concerned, they certainly would get an amazing deal if they bought the company for 5x or valuation. But I think these mid-tiers and majors, again, they're very focused on risk and in staging their projects and staging their capital requirements as well. They have basically a development pipeline. I think there's also a little bit of some scars from the 2007 to 2011, 12 bull run in the gold price, where I think there was some basically capital destruction or value destruction M&A there, as the price of gold was skyrocketing, and I think there's a little bit of just conservatism in a lot of like the mid-tiers and the majors. And also, like, these companies are not necessarily entrepreneurial by nature or by definition.
Sure.
They're big machines that are basically used to buy projects that are as de-risked as possible, and then come in for the final piece, basically with the capital and the expertise to build the mine. So as much as possible, they want to wait to the last minutes. But as actually, going back to the previous cycle, what happens is when the M&A, when the music stops to a certain extent, and basically when gold starts going vertical, like you went basically in 2008, 2011 from whatever $600 to $1,800, gold did 300%. There's an incentive to actually then just don't get left out. I'm really looking forward to see a market like that. And one of the reasons for this as well is these projects take a long time. Average timeline from discovery to production globally is 17 or 18 years. Supply response from projects in terms of relation to the metal prices is very, very long, and this creates a very long cycle industry that spends basically has few years that are extremely depressed with excess capital, and then when the bull run starts, basically it's a frenzy. So I think capital discipline has been the focus for these majors, but also the world, especially compared to 2009 2011 cycle, has become a lot smaller. So, and there's not a lot of discoveries. So I think the setup is actually very, very exciting for juniors and developers, because the world again is much smaller from a political risk perspective. And when the big shareholders of the big mining companies start demanding growth in terms of ounces, not in terms of the gold price. I think the gold price will continue to climb, but really expand their operations and use capital to grow their production profile as opposed to just replace. I think we can have a really explosive returns in advanced explorers, in the developers, because I think we have a lot less options these days, and I'm waiting patiently for that time to come.
Well, there you go. I think this industry requires a bit of patience at its best, a little patience at its worst. But I know, and in the same vein, we are seeing acquirers start to pay premiums for permanent assets with infrastructure, with processing facilities, roads, power, camps, etc. And environments for new mines can, depending on jurisdiction, obviously, take a decade to get permitted. How do you quantify this advantage, and how should investors be factoring it into their valuation models? Brian, I'll start with you if you don't mind.
Sure. A couple simple ways. If you're taking a deposit and a system forward, and you don't have this infrastructure base, benchmark it. Look at what it costs to build a mine these days. There's enough feasibilities out there, and get that capital number, and then to just say, is this achievable for this company to take it forward? And when you think about it, if you've got a greenfield project and you've got $1 billion capital spend ahead of you, and you've got a 30 million market cap, is this a realistic scenario or not? And so I think there needs to be a piece of realism built in there in the non-infrastructure bearing greenfield projects. And that can be built in proper capital assumptions. It can be built in a risk profile as applied to a project. By that I mean discount rate. There's no way you should run a financial model at a 5% project, for greenfield project. Capital risk profile is just far higher than that, 8%, 10%. And the final thing I might say is just really understand a project's sensitivity to gold price. And by that, I would say there's lots of projects that look poor at 1,500, and those projects are looking very, very rosy at 3,000. And so understanding a project's scalability, ability to handle the capital hurdle and get built in this gold price environment. So taking the understanding of gold price sensitivity really key. So I would flag those three things, appropriate capital forecast, discount rate, and sensitivity to properly understand the financial risk of a project.
Great. Mark, I'll throw it to you, same question.
Yeah, no, I think it's the timelines are very important. Time is money, and of course, at the end of the day, you're looking at the NPV or the discounted cash flows that you project for any project. So timeline for production really kickstart that expected cash flow that's basically able to reward the investors, the equity holders, and service the debt and all the capital that is required to put a project into production. So it's again, as I mentioned in the beginning, there's a lot of factors you have to look at. Time is money, and the permitting timelines are very important, but also the existence of infrastructure. As Brian was mentioning about the developed camps or brownfield projects, when you already have roads, when you already have power, when we already have mine permits, when you already have a mill, when you have a lot of these things already in place, or we have where you have the fast producing mines or tailings facilities, these significantly not only basically provide with already existing infrastructure that significantly reduces the capex, but also can increase the certainty of being back into production in a timely manner. So it's certainly very important, and it's just part of the many aspects and many factors that any capital allocator or any mining company or any mid-tier or major needs to look at as they decide where they're going to allocate their next chunk of capital to maintain production or grow their production profiles as well.
That makes sense. And Bob, I'll throw it to you for what investors should look for.
Yeah, it's the time frame is certainly an interesting one. It's something that we're very cognizant of, because our whole business model is really fast tracking our project to production and getting there as quickly as possible. And this is one of the reasons why we're focused in where we are in Mexico, because we're only 13 kilometers from the Topia mine that's owned and operated by Guanajuato Silver, and so much like Brian was saying, having that infrastructure close by, being able to develop something quickly, it's a past producing site. We think we can fast track to production, get through the permitting stage fairly quickly on a relative basis. So, if we can advance to production in 2 to 3 years, then, that's compared to a lot of other projects that, that are looking at 5, 10, 15 years before they get there. That's something that we're really trying to educate people on, and so it's something that is extremely important, I think, and it should ultimately play into the valuation of a company, because if you're looking at something that can't production for another 10 years or more, then why would you be valuing that at a similar price to something that only has a few years to go? So it's I think a key component of the whole valuation formula, and something that we're certainly very focused on.
Great. There's one question from the chat that I think you'll all appreciate because it gives you a chance to promote your company, but it bounces off of something Marco said, which is agreeing that with majors given their bad capital cost discipline during the last bull run and resulting poor shareholder returns, the market's not keen to reward the sector with fresh capital until the companies repair that poor shareholder return history. And he notes that it appears to be impacting juniors more than in previous cycles. So what he wants to know is, Brian, I can start with you here. What are your companies doing to complement this objective by the majors and show them how your strong project economics can replenish their dwindling reserves and actually enhance their objectives?
Yeah, I mean, for us, in GFG has 3 corporates in our structure, so we're averse to playing this path. Really important to cultivate relationships and have active dialogue with your peers and the producer landscape. In the end, they need to understand the risk of what we're doing and the stage with which we're at from a project perspective. And they also need to, in detail, understand the competence of the team. And you really only get to that by having, strong technical group on group meetings and dialogue. So for us, Alamos is our largest shareholder, super strong supporter. They need to believe in A, the people, and B, the assets. And that's really where they start. Keep them really engaged, ask them what they would like as a shareholder. And if they, believe in our strategy, being super open on strategy, to the point where maybe if a belt is still open or overly competitive, that may not be in your interest, but in much more mature camps, the land is pretty, people, you have the land you have, and there's not a whole lack of opportunities. So being open about strategy, particularly with a producer, probably allows them to come into your structure earlier. And we've had good success with that. So if we talk to about, our shareholders in the corporate registry, we're like, here's why we went to Timmins. Here's how long we've been there. Here's where our competitive advantage is. Here's why you would invest in us now. And here's an exit path down the line that if we're successful, makes you guys money as shareholders.
Appreciate that very much. Bob, I'll throw it to you for what is Pinnacle doing to be attractive to majors who are cautious after the last cycle?
I think, well, our first project really is relatively small, so I'm not looking at this one to attract any major attention, to be perfectly honest.
Sure.
Our whole focus right now is just in getting to cash flow as quickly as possible, and so that's one of the things we're really keen on. But at the same time, we're looking at the next acquisition, which I intend to be larger than the first one. And I'm hoping more silver dominant than gold, but that's in part because I'm a silver guy, and that's where we are in Mexico. But that said, the idea is just to keep acquiring new and larger projects to really build a mid-tier producing company. I mean, that's really what we're all about. So we're not so much, at least at this stage, focused on the concept of acquisition and being bought out. We're just looking towards building a company, getting to cash flow, and building it that way. So that's really, it's just trying to convey that concept to potential investors, because it's not the norm, and we don't want to spend years and millions of dollars building out a big resource. And yet that's what a lot of retail investors are looking for, and even some of the larger companies. They want to see a resource, they want a bigger operation, and that's just not really where we're at the moment. So it is a bit of a niche model, I guess you could say.
Sure.
And it's for us, it's largely a question of educating on people on that, and trying to get across why it is a viable business model, as opposed to the standard, drill it and build it kind of thing.
Cool. No, I appreciate that, Bob. And Marco, I'll throw it to you for what Cassiar is doing.
Absolutely. So I think, first and foremost, every asset is unique, and the asset is the asset. And we have a lot of advantages because we have mine permits, infrastructure, access, roads, tailings facilities, a fully unpermitted mill. We have all of these good things. But more importantly, it's really about the people and the quality of the work that you do. And we have basically, a world-class team that does work at the level that the mid-tiers and majors expect us to do the work. And at the end of the day, we're advancing and growing a project, not to have great drill results and that you can basically excite retail investors with, but actually growing and expanding a resource that actually can become a mine, either a mid-tier or the mid-tier size producer or bigger, or eventually get taken out at a valuation that would be attractive for both us and our shareholders. So it's really about doing the work, focusing not on the shiny objects that might get people excited in the short term, but focusing on the larger picture that really de-risks and advances the project, and doing the quality of work that basically the big producers expect, so that you don't have basically negative surprises, as you do sometimes have in the industry when sometimes new mine developments don't go so well.
Appreciate that very much. I now want to talk about jurisdiction, because I do think we've touched on it in a couple different questions, but I want to get right into it because I know each of your companies operates in a different one. Brian, obviously you're in Ontario, Marco in British Columbia, and Bob in Mexico. So I'm going to I'll start with the Canadians, and then Bob, I'll go to you afterwards. How do you guys weigh the premium for Tier 1 Canadian jurisdictions against potentially higher grades available, or shorter permitting times, et cetera, available in other regions? Brian, I'll shoot it to you.
Yeah, for me, I think about a jurisdiction like Timmins, obviously Tier 1 from a mining perspective, historic production point of view. But what I'm most interested in is the character of the systems that are there, and of that population, how many of them reach economic criteria and thresholds. So, having ran an operator in Saskatchewan prior to GFG, very familiar with the systems in Saskatchewan. If you just took the average gold system you found in Saskatchewan, you might find something that's 100 or 200,000 ounces and marginally economic. So you need to have to find that sort of P80, P90 system before you get something that's economic. Whereas if you go into Timmins, and you start looking at the average deposit, the average discovery in Timmins, you find things that are 500,000, 750,000 pretty regularly. And all of a sudden you're already at that economic threshold. So this piece about jurisdictional premium for GFG, exceptionally relevant and really core to our strategy. We're a high risk end of the business. And if we're going to be successful at finding, a 50th percentile ore body in a jurisdiction, we want to know that that thing has a reasonable chance of being economic. And in Timmins, the statistics tell us it likely is. So this piece for me really goes down to character of the systems. How many million ounce, 750,000, million, 2 million, 5 million, 10 million ounce systems are in the belt you work in, and how mature is it? So there's lots of cover in Timmins. We're still finding brand new systems right at surface under 30 meters of till that you could open pit. And you're not going to find that in certain jurisdictions where there's lots of outcrop. So the jurisdictional premium, lots of different ways to view it. The simplest for me from an exploration point of view is really the nuts and bolts of the technical character of the systems and what's our probability of success.
Great. Marco, I'll throw it to you for how you think investors should think of jurisdiction.
Absolutely no. Just on back of Brian's comment, of course, like the geological endowment and the geological setting, at a more regional scale or more district or local scale of the deposit is very, very important. When I think of jurisdiction, I really think about sovereign risk. Do we have rule of law, property rights, etc.? Because the last thing you want to do is spend $500 million building a mine, and the whatever government from a less reputable country decides to take over your property, and that's obviously catastrophic for any investor and for any mining company. to be quite honest, up until maybe 2020, I always saw political risk as a bit of a factor. But I think starting in 2020, I actually turned, quite negative. Or for me, political risk became something a lot more digital. As before, I might have a preference for, Canada is a better jurisdiction, or Australia is a better jurisdiction, and maybe going to Sudan, where I've been looking for projects, is not so good, and maybe I would pay a much bigger discount for that. I think right now, in the world that we live, with the money printing that has happened since 2020, inflation, and the basically natural social unrests, civil war and hot wars that started, and a completely geopolitical global setup that changed completely. I became a lot more digital. So right now I have go no go zones, and as I mentioned in the beginning, go is North America and Australia. And basically, for the most part, no-go is the rest of the world. I kind of like, some parts of Scandinavia. But I was a shareholder, for example, at Barrick many years ago. And, the political risk in Barrick is just, massive, not to speak about, I guess, maybe the strategy for focusing more on copper than in gold. And I think we kind of see the results of that. So, I think I become much more risk averse in terms of political risk. And if you really look realistically around the world, I mean, look at what's happening in Mali. They're basically taking hostages over there. So
it's a fair point, and certainly about Mali. It's the Barrick risk that we're seeing the results of. Bob, I'll throw it to you because Mexico, I think, obviously has changed the most out of the jurisdictions here recently. So I'll throw it to you for how investors should think about Mexico and jurisdiction generally.
Yeah, certainly. I mean, Mexico it's a mining country. It's the largest silver producer in the world. So I mean, it has a lot of great features going for it. I mean, as a geologist, that's really one of the first things I look for globally in terms of a place to go, because if a place doesn't have prospective geology, well, then why would you be even there in the first place? So you sort of narrow it down, from that, and then when you start to look at other aspects of jurisdiction, politically. Politics change every 4 to 6 years, depending on where you are in the world, and with the sort of timelines and timeframes that we've talked about in mining, that 4 to 6 years easily overlaps in pretty much any project's development. And so you have to factor that in, and where, not just where a country's political views are at the current time, but where you think they might be with the next administration, and where we've come from and what the trends are and so on. So you mentioned that Mexico has changed a lot, and it has. The previous administration was certainly not mining friendly. Prior to that, it wasn't bad. I've been working in Mexico for 30 years, so I've seen a lot of changes. And from a regulatory standpoint, we have seen changes, definitely. I think changes for the better. Environmentally, things are starting to become more aligned with a lot of other countries in the world, and I think that's a good thing. Mining companies do need to be more responsible, more aware, and so on. And so I think that's all positive, and just something we have to work with. The current administration in Mexico, I think, is more pragmatic than the previous administration. They are showing signs that they recognize the contribution that mining makes to Mexico, and they have just started to permit operations now. We saw Silver Tiger get their permit a few weeks ago, which I think was the first one in like 6 years or more. So that sent a pretty clear signal that Mexico is open for business again from a mining standpoint. And so, I mean, that was huge for the industry at large, because there's been this kind of a cloud over Mexico for a while. People wonder, gee, are they going to change? Should I or shouldn't I? And so I mean, we've kind of stuck it out, and we thought it was going to change for the better, and it has. So we're just trying to work through that environment now, and I think Mexico does have a pretty bright future, and we're in a mining district, a very well-known mining district that dates back to the mid 1500s. So, it's not like this is a new area or anything, and yet our project has never really seen any modern explorations, so or development. So it's a somewhat unique opportunity in some respects, certainly compared to other jurisdictions. It's not that unique in Mexico, and that's one of the reasons I like the country. And there's still lots of opportunity there, and we're looking for, as I said, another opportunity like this to continue to build the company there.
Oh, great! I appreciate that, and yeah, it's certainly Mexican politics are fun to watch, and this year I think we're definitely seeing those signs that you're talking about. I want to talk about generalist investors for a second, and Brian, I'll start with you here. I've been hearing in panels over the last 2 years that for a real re-rating, generalists need to get back into the mining sector. And I'll say as somebody who runs a mining webinar outfit, I see them. They're coming in actually for the first time in the last 3 or 4 months, and they do have different struggles with the technical complexity of evaluating mining projects. It's not like investing in NVIDIA or Coca-Cola or IBM. So what's your approach at GFG to making your story accessible to generalists who may not understand geological nuances or the Lassonde curve, but recognize the macro tailwinds and want to get interested in the sector?
A couple things we do. We start by making sure a given investor understands us as people. And so if you can understand our track record, you can understand what we've done historically through our career, finding mine, building mine, operating mine, selling mine, whatever it may be, if you can build that personal relationship and endear a given generalist investor to you as a person, very key in getting them over the line. Second thing would be talk strategy. And so when I think about it, a given investor may not understand the details of mineability and dilution in Timmins, but they can understand a macro landscape of why do we go to Timmins? What's our philosophy in being there? How do we allocate capital? And what's our exit strategy? So we talk about those higher level strategic pieces, and I won't say we simplify it. We just keep the dialogue out of the details for a non-technical investor. Me being a technical person, often I have to get dragged out of the mud because that's where I kind of like to play at times. But that's what we have. Investor relations and peer group and communication experts to help us out is to get your pitch at the appropriate level. So those are two really key things that I think we focus on is the people and strategy talk.
Great. Marco, as generalists are coming into the sector, how do you think the industry should talk to them, and how does Cassiar talk to them?
Well, I actually think that there's a lot of education that is needed for generalist investors, because I think it's a unique, not only it's a unique industry that has a few more risks or a little bit more complex than your average Coca-Cola or IBM, but it's also at the end of the day not rocket science either. So I think education is very important, and I think there's a wealth of people that are surrounding like the mining industry that provide some level of education there. I think, and people really need to put the effort as well. Although I feel, I've been in financial markets for over 20 years. We also kind of live in a time in history where people's attention spans are very small, and they just want a fast formula to make money without actually putting any effort. And I think that's a very bad idea. So I think people really need to put some efforts in really understanding things and asking questions and spending time, as opposed to just buying a stock that they saw a guy on YouTube recommending. In what relates to Cassiar Gold, I think it's what we're doing is really provide all the information that we can in the most digestible manner. We have short presentation, long presentation, technical presentation, so kind of adjusted to different knowledge levels, so to speak. Try to simplify it as much as possible. Although it's also like a very regulated industry as well. So there's a few things that are kind of funny that you cannot say, and some that you can say. Many of which is allegedly done to protect investors, but I think it just kind of limits the ability of companies to communicate properly in a simple manner, what they have and what's the potential and what we're trying to achieve. So I think there's a lot of work that needs to be done on the educational side, from the general industry, on all the people more on the financial services side surrounding the mining companies. I think on the government and regulatory side, I think needs to be a little bit more thinking about the limits or the lack thereof in which you can communicate with investors as well. I think investors need to put in the efforts, because without it, you're not going to understand anything. The companies, I think, can always do a better job as well at communicating what they have and explaining in a manner that is simple and easy to understand, while at the same time making sure we comply with the regulatory requirements as well.
Those requirements are around. Bob, I'll throw it to you. One additional quirk I'll add to yours is, in previous cycles when generalists have gotten in, did you communicate differently, or was it about the same as you always tried to?
I don't think it's that different, really. I think demographics have changed, certainly, and I think that's a big part of what we're seeing now. That and the whole aspect of how we communicate now, social media and, panels like this, this sort of thing. I mean, you wouldn't have done this 10 years ago, and as probably maybe the only positive thing to come out of COVID was the rise of this type of interaction. But for our story, at our size, we're still largely a retail story. So, when you talk about generalists, it's not so much generalist funds that we're talking to. It's more the generalist retail investor, and that's where the demographics come into play, because how do we reach out to folks that are more likely to buy stock on their phone because of something they've watched on YouTube or seen something on Instagram or whatever. How do you reach those folks? And so from a marketing strategy standpoint, it's completely changed from the way it used to be. So this is something that we're just constantly talking about and trying to develop it, it really is an educational challenge, because the mining industry is not known for having a lot of influencers that are out there trying to convince people to buy mining stocks. If you know of any, please tell me. But I saw there's a video on YouTube that I watched, and I think it was called something like "A World Without Mining," and it's really quite well done if you haven't seen it. But I would encourage people to just Google it and look it up, because it starts with sort of standard scenes, an office building, city, and then you start to strip away everything that is either made of metal or is somehow related to mining or is produced from things that are made of metal, and so on and so on. And at the end of the day, at the end of the video, rather, after you've stripped everything away, you're essentially left with a bunch of cave people sitting around a campfire with no clothes and no buildings, anything, because everything comes back to mining. And it's a fantastic little video, and I would certainly encourage all the viewers to have a look, because it really does emphasize how important this industry is to everything, to everyone, to our societies, no matter where you live in the world, what you do. So I think there's that educational aspect of it that really has to be pushed, and for us as an industry to let people know that we are and can be responsible, and we want to be. We're not these big bad guys that people want to believe. And the unfortunate thing is, it's a little bit like plane crashes or something like that. You only hear about the bad news. So if there's spill or something, yeah, it gets the headlines and so on. And then the entire industry gets painted with that same brush, when really it's unfair, and it's not reality. So I think education is a huge part of it, and that's something that personally I believe in, and my wife's a teacher, so I kind of have to say that anyway. But no, it's something that's very core to what we do.
Awesome. Now, as we come towards the end of the hour, I've got a question for each of you individually, just really specific to your projects. But there's a question from the chat that I want to add on. So when you go for my question, try to add on this one too. And that's, somebody wants to know if you can share why your company is shareholder friendly, which I think is actually a really interesting question. So throw that on to the end of the one that I asked. Brian, I'm going to start with you on these individual questions, because I know GFG's assembled a pretty impressive portfolio in the Timmins camp with multiple past producing mines, plus proximity to major infrastructure. So how do you see GFG fitting into the upcoming M&A landscape? And given the camp's existing mill infrastructure, what path to production is really going to make the most sense for your assets?
Yeah, look, as I talked about before, we have several corporates in our structure, and that's because we've cultivated strong corporate relationships over the last decade when we've had GFG in the public domain, and that dialogue is key. So strong relationships, existing CAs, understanding that we work in a belt in Timmins, and in reality, discoveries in Timmins are acquired by producers. And so the likely path for us is, if we're successful at what we do, hopefully we can unlock value for an existing mill. And if maybe we find the next Cote and it's 20 million ounces and we go build a mill. But the likelihood is that, given the balance sheets and the scale and the size of the producers in the belt we work in, is that we're acquired. So those strong relationships, integrating yourself, having them in your share registry, active dialogue, and being open to partnerships too. So when I think about, it's not just an acquisition of the company level. Sometimes partnership involves risk sharing at an earlier stage level. And so we might take a portion of one of our properties and partner it. And that might be the right path for both sides. It might be the right path for a producer to say, look, we don't mind partnering. We get a foothold in the Abitibi. We get a good team to partner with, and we can put some capital in the ground because we don't actually have good earlier greenfield stage ground. So there's a variety of mechanisms to trigger. One of them's, the partnership model. Other one's just integration and having open CAs and dialogue and building that people relationship. So there's lots of different ways GFG go about cultivating that. Sorry, on the other side of the question, Romeo, just refresh me.
Really, the final piece that somebody from the chat want to know is why you're shareholder friendly. So if you got that.
So this is key, and I do think it comes down again to the people. So if you took our top 10 shareholders at GFG and we talked to them all pretty regularly, and I would hope that you would be able to ask them, say, are they available? Is management available? Do you get management's time? And are they, credible and straight and transparent with you? So one of the things I think GFG really strives itself doing is having a very open dialogue, always making time for those shareholders. Joe in Iowa might have, 100,000 shares, and Joe can call me anytime, and, it's happy to do that. Mr. Stavros and, down in the States, he has, 30 million shares, and you know what, he can call me anytime too. So I think it's just having that bandwidth to say shareholders are important to us. We need to spend some time with them, and also understanding sometimes I might not be the best guy to talk to them. Sometimes Mark and BD and IR is the best guy to talk to them. So website, have a proper website that's functional. Sometimes people's websites pretty dated and not efficient. So the web access component and social media presence. Six does a great job of putting us out there. And so there's lots of different things that GFG does to increase our exposure and attractiveness to shareholders.
Thank you very much, Brian. Appreciate that. Bob or Marco, does either of you have a hard stop at the hour? Because I'll start with you if you do. Okay, perfect. Then I'll do so randomly. Marco, I wanted to throw it to you. I know Cassiar has delivered substantial resource growth with the 2025 resource estimate showing that 410,000 indicated at 1.43 grams per ton, 1.9 million ounce inferred at Taurus, plus tons of drilling this year with results still pending, which obviously we're excited about. Catalyst timeline shows a PEA in, I think, Q2, Q3, 2026. At 4,100, 4,200 gold, which we seem to be settling around, for at least for now, what kind of economic profile do you expect Taurus to deliver? And how does the combination of the mill, permits, infrastructure potentially compress the timeline to production compared to some greenfields project?
Well, there's a couple of questions there. I'll try to answer them all. I mean, the economic profile, I think it looks very good. I think a project with this size, the combined total resource is already over 2.3 million ounces at over a gram per ton starting at surface, with an overburden of on average 10 meters, and with 90% of the ounces occurring within 150 meters from surface. So, I think a project like this, I cannot, talk about specific, project economics due for regulatory reasons, but you can easily compare with other projects with this kind of grade. And when you look at projects with this kind of grade, with this kind of context, I think the cost per ounce is nicely below $1,500 per ounce. So that's actually it looks like a very nice number. That's US dollars. So I think it looks quite good, but we're not satisfied. We want to grow this. We've only drilled a very tiny portion of our project. We want to continue to expand it and grow it and de-risk it and advance it. So we want to do more expansion drilling, which is what we've been doing, and we'll also do more infill and upgrade the resource over the next few years to eventually get to a mine decision, say in about 5 years on the bulk tonnage side of things. Having that infrastructure that we pave roads, grid power, water, having the full unit permanent mill, having the mine permits significantly cuts that path to mine decision in production, obviously. We're very happy with that. It's very rare to find something like this, and it's a massive competitive advantage. You're seeing some conversation by the Canadian government that's going to fast track some projects. I guess we'll have to wait and see if that actually materializes in practice. But for what concerns us, we don't need that kind of help. We are in a very, very lucky and blessed situation. So we're very eager to continue to advance this, and also as you mentioned, like we'll have met studies in the PEA coming actually in the first half of 2026. So there's a lot of drill results that we're actually going to be starting to release imminently, and then some more catalysts and project de-risking and advancement with the met studies and the PEA. Going to the other question you were throwing about how we're shareholder friendly, I think going to the PEA is a way to also help educate some investors. You have a lot of regulatory or very technical disclosure that is required, and for a lot of I have a lot of shareholders that are good friends of mine, and they're just looking at the numbers on the press releases and what does it all mean? And sometimes it's hard to get your head wrapped around, even if we're motivated, even if you put a significant amount of money. Sometimes just explain to me in layman's terms. So I think PEA and translating all of these infrastructure, permitting advantages, grades, resource size, etc., tonnage into dollars, it becomes a little bit more understandable to the average investor. And I think the other aspect as well, or the two other aspects that make our company very shareholder friendly, is really our key advantage, at least right now, I don't think it's gonna be here for a long time, is really how undervalued we are. We're trading at an enterprise value per ounce on the ground below $15 Canadian, when the gold price is over $4,000 per ounce. So that's a very good way to be shareholder friendly if you're buying shares on the open market right now. And also the last one is really alignment of management in the boards. Board and management have put millions of dollars into the company, including myself. We participate in every single private placement. We think as shareholders, where everything that we do is to create value for shareholders and always thinking of shareholders in mind. So I think that alignment is also critical, and I think makes us very investor and shareholder friendly as well.
Awesome. Appreciate that, Marco. And Bob, I'll throw it to you. Silver, obviously, broke through $58 this week. Pretty remarkable, exceeding an all-time high. It stood for 45 years. It's also up 80% year over year, even outperforming gold, which in this year is very surprising to see and interesting. And I know Pinnacle's got those high-grade silver project in Mexico, I think 2,280 grams per ton silver. How dramatically does this price environment change your economic assumptions? And are you looking at El Potrero through a different lens, given silver's kind of wild momentum right now?
Yeah, it's an interesting project in the sense that with the mix of gold and silver and these vein type deposits, you can get variations across the project, and we're with those high grade silver results we're finding on surface above some of the old this historic underground workings, where the highest grade we've achieved underground was 520 grams, but on surface we're getting up to 2,280. So there may be a vertical zonation there where silver's increasing upwards, and that's something that we're certainly going to be pursuing as we get further into drilling and testing some of those targets. So it's difficult to say at this point in time what the average grade for the deposit is going to be at the end of the day. Right now it's sitting at about maybe 75-80% gold and 20-25% silver, but say that could change. And as I mentioned earlier, I'm looking for another project that would maybe more silver dominant, but we certainly want to take advantage of this. And that's having the high grades is something that is really that's something that I've always focused on. I mean, I've spent pretty much my entire 45-year career in high-grade underground vein-type deposits, including 15 years in Timmins, by the way. So, it's something that's kind of dear to my heart, and I know how important grade is, and so that's something that. That where we really like this project, and I think it can really help us, going forward. So that's key, whether it's gold or silver. I mean, as far as communicating with shareholders, we find with Pinnacle. Well, I mean, much like the other guys, I mean, we're 27% owned by insiders, so we've got a very large stake in this ourselves, and so we're very much aligned with the rest of our shareholders. And our largest shareholder is in Munich, Germany, and it's largely through his network that we brought in a lot of other shareholders from Central and Eastern Europe. And admittedly, there's a bit of a language barrier there as well at times. And so, not only are you dealing with a situation where people are sort of, generalist or non-technical, but, English is probably not their first language either. So when it comes to things like news releases and presentations, and particularly for a technical guy like myself, I find that I have to communicate in a way where people can understand what I'm saying. You focus on the relevant points and try to keep things, as Marco says, in layman's terms, where people can understand it, and you provide enough sort of background information to provide enough credibility, I guess, that people can see that you know what you're talking about, and give them the opportunity to reach out should they want more information, and have it available on a website or presentation, whatever it might be. And you need to do this, I think, in a regular fashion as well. Just putting out a news release once every 2 months and expecting that that's going to reach everybody, it's just not, that doesn't cut it. So you have to be communicating regularly with people in a variety of different formats, whether it's news releases, presentations, video calls, whatever it might be, and roadshows. So it's something that I guess for me personally, it's something I really believe in, and then on a local scale, maybe not so much for shareholders, but communicating with the local people, local communities, and this kind of comes back to what Brian was saying too, is super important, and especially in places like Mexico, where there may be a cultural language difference, and 100% of our people in Mexico are Mexican, and I'm rebuilding the team that we had before with Great Panther, and because of that, we've got already a great relationship with communities in that Topia district. So we have a bit of an advantage there and a bit of a head start. So having those people there on the ground goes a long way in building those relationships with local communities and with government organizations and so on. So it's it's a bit more broad based than just shareholders, but communication is critical.
Awesome. Well, Bob, Marco, Brian, this was a great conversation. Thank you so much. To everybody joined, when there's an audience this big, I always thank you for behaving as well. It was very nice of you in the chat. Your debates were very kind and gentle, so I appreciate that very much. And I really appreciate everybody's insights. If you have more questions or want a meeting with any of the executives that were here today, please do send out meeting requests that you can do retrospectively on the registrar or as you've already done when you registered. But thanks everyone so much for joining. And gentlemen, hope you have a great end to your day.